Yeah, welcome for this panel. I'm very happy to have basically the evening part. Well, depending on wherever you are on the world, it could also be morning or evening or midday, whatever. But today we are talking about the institutional adoption of cryptocurrencies and digital assets in general. Maybe I quickly present myself with one little sentence, two sentences. My name is Philip. I'm working at the Frankfurt School of Finance. That is an university sitting in Frankfurt. It's one of the two universities in Frankfurt. We are a very small university. We are very agile, therefore, and that's why we have a blockchain center and the other universities don't. It works very well, and we also do conferences and research projects and so on. And we are also trying to be part of the community. And with this, I think that's fine from my side. I would directly hand over to you, Maximilian, and you, Matthias, asking you to present yourself as a person, please, but also present your background and the company. This is, in my mind, always very important, such that people get the background, the context of what they are hearing. I cannot say ladies first, unfortunately. Ladies are scarce in the field, unfortunately. But maybe Maximilian, maybe you start.
Yes, sure, sure. So let's start, and I think that's a perfect match that we now talk about the institutional adoption of cryptocurrencies and of tokenized securities. Um, I'm from and also sitting currently today in the fully regulated bank, Bankers von der Heydt here in Munich. For those who are not on the panel, I make a short overview of the bank. We're quite an old bank, founded over 250 years ago. Like this, we're one of the oldest banks here in Europe. And within the recent years, we have developed two branches which became quite active. The one is the structured finance branch, and the other one is the application of the blockchain technology. They go hand in hand together quite well. And with the application of the blockchain technology, and especially among the other banks, we can definitely say we are now amongst the leading banks applying the blockchain technology here in Germany. And for this, we offer the fully regulated services also in respect to cryptocurrencies from a regulated bank.
Yeah, actually, I can confirm this. Coming from Germany, you are indeed one of the banks running in the foreground towards crypto and digital assets. You are a small bank, of course.
Quite a small, yes, yes.
Advantage. Smaller banks typically are much faster than larger ones.
Same with you. Smaller universities are also quite agile, and the same from us as a bank. If we would have thousands of employees with below 50,
you cannot move.
You can't manage it.
Exactly, and therefore we are now heading over to Matthias. He's sitting in Switzerland. Switzerland is a smaller country than Germany. That's why you are much faster than we are, at least with regard to regulatory concerns. What you are doing in Switzerland concerning tokenization of shares, for example, is not possible at all in Germany. So therefore, the time differential between Switzerland and Germany is probably at least 3 years, I would say so, concerning tokenization of equity. But it's your task, please, to present your company, and also what's going on in Switzerland.
Yes, great. Thank you for having me. It was a great pleasure. Also, the brief keynote I could have, I think, an hour or so ago. My name is Matthias. I'm one of the co-founders and group CEO of Signum, and we are also a bank, but more a technology group with a banking license. We were the first bank to be granted in Switzerland a banking license fully focused around digital assets, which encompasses cryptocurrencies, stable coins, and asset tokens. And we provide basically an all-in-one account approach, linking traditional finance with future finance, as we call it. That is custody, 24/7 trading, lending with crypto as security, asset management products, and, as you've mentioned, Philip, tokenization. We've been set up from the very beginning across Switzerland and Singapore, two dual headquarters approach, because also Singapore is quite advanced in terms of regulatory frameworks. Fast follower, not first mover. Switzerland clearly is, but for us, these are the two hubs from which we feel we can grow the best. And we're right now 110 plus people across these two countries, and literally have in the last few months been subject to a hyper growth phase given the market situation, and particularly the institutionalization of the space. We are operating the business as a bank since August 19, so a very young company, right? We launched conceptualized end of 17, beginning of 18, started preparing all the business plan and of course the filing, and are now managing significantly more than 1 billion assets under management Swiss francs. So quite happy with the progress.
Okay, perfect. So we have two small but very, very advanced banks there. Bankhaus Vonderheide in Germany is really at the forefront in Germany, but we of course have to admit that the entire country of Switzerland is a little bit ahead in crypto.
Same with Liechtenstein.
Yeah, exactly, and therefore I think it's fair to say that the Signum Bank is basically a little bit more into crypto and so on, and Bankhaus Vonderheide is basically also developing services. Maybe just to get the profiles of you both right, are both of you offering crypto services or at least planning to do so? Fair enough, including custody and so on. And the other question is, besides crypto services, Bitcoin and so on, are you also offering digital asset services, for example, tokenization of bonds, tokenization of shares, and so on? What I would like to ask with this question, to provide the audience with a feeling, that where are exactly the differences with regards to you as two advanced banks in the crypto space. Maybe Matthias, would you like to start?
Yes, so for us, it's really a focus on both cryptocurrencies and asset tokens. I would go as far as to say one cannot be successful in asset tokenization without understanding crypto, because it's so many things are the same in terms of infrastructure and how to integrate it in institutional grade processes and operate it as a bank. So yes, if I look at the revenue drivers right now, of course it's crypto because it's custody, it's trading, it's options, regulated options for hedging strategies, etc. on crypto. It's lending, it's the asset management products, ETPs, fund of funds that we have launched. These are the revenue drivers. This is what drives our profitability at this stage. However, as an emerging piece, we've invested over the last 3 years significantly into an end-to-end tokenization stack, where we can cover the entire life cycle, including a secondary market, an open trading facility signed off by the regulator, where these asset tokens are now, as per the new DLT law, with full regulatory clarity and legal clarity, I should say, can be traded. And to not have a break in the whole system or value chain, we've also already more than a year ago launched our digital Swiss franc token, DCHF, because if you don't settle also on chain, you give away a lot of the advantages that the blockchain actually brings. So with our setup fully integrated also in a core banking system, then leading to reporting, taxes, etc., we have a true delivery versus payment ecosystem that we could create. Yeah.
Excellent.
And maybe just to make it a bit specific, right? We're tokenizing portfolios of wines, art, real estate, mid-cap companies, and then late-stage growth venture capital verticals.
Okay, Max, over to you.
Okay, well, first of all, congrats, quite a great setup. And yes, I fully understand this setup. We have quite a similar setup here in Germany. From the crypto asset side, we offer services for crypto brokerage, so that also retail clients can come and trade together with partners over our infrastructure and have their cryptocurrencies under custody in our bank. That's one thing, but the other thing is also we act as a fully licensed crypto custodian here in Germany for institutional investors. Besides this, we are also active in the tokenization of assets, and exactly, Matthias, as you said it, with the digital currencies, it's quite important, else everything makes no sense at all. And that's exactly why in this case we do not have the digital Swiss franc, but the digital euro, the EURB stablecoin on Stellar protocol, which is required for the delivery versus payment processes. And as you said it, I can only fully agree. I'm coming from the structured finance field, and I've my experience in Luxembourg transactions Luxembourg clearing Clearstream transactions, bringing the securitized bonds to the exchanges. And I know how it works in this world. I know what institutional investors require. And definitely, you have to have exactly the same on the token-based world, and you have to see the token, in my opinion, as another form of representation for the security, but it should not be another legal form, else institutionals do not know what to do with this. And Philip, as you also said it, and I fully agree that the German regulation and the tokenization is not as quick as Switzerland and Liechtenstein. And that's exactly why we also act as a partner for tokenization projects, which are based on the Liechtenstein law of tokenization. That's one thing. The other thing, to jump in the regulatory environment again, as we've also announced shortly, we are now acting as a security trustee for an exchange-traded crypto product in cooperation with Iconic. It's also listed on Xetra Stock Exchange, and there is also the requirement that you have a regulated bank, which is ensuring that as in all other products, as a security trustee, you ensure that the underlying asset exists. And that's exactly where I think we need a bank in the crypto environment.
Yeah, so thanks very much. I think this is extremely positive to hear that, even in the highly regulated financial sector, you can be innovative, so it does work and so on. But I think you are not representative for the Swiss or the German countries, right? At least speaking from Germany, there is not so much happening besides you, Max, and a couple of other smaller banks, right? Deutsche Bank and all the other huge ones, they appear to simply do PowerPoint slides at this point in time, doing studies and doing PR. But for example, from Deutsche Bank at this point of time, you cannot see any product roadmap and nothing, right? And therefore, I just emphasize this because the landscape is not so friendly at this point of time as you are as smaller banks. And I think as far as in Switzerland, you also have very conservative banks like UBS and others who are also not adopting this as fast as you. So I just wanted to provide the context that you are very early movers in your countries, and it's not the entire country moving so quickly. That's why I would like to come now to the topic of institutional adoption. How would you see institutional adoptions? What are institutional investors are interested in? Is it Bitcoin? Is it Ethereum? Is it DeFi? Is it tokenized assets? Or is it the digital euro from an industrial perspective? Because you can make excellent business models for automation of industrial processes and so on. So from an institutional perspective, what are people interested in? And if you may, you can also differentiate between the time before yesterday, before the crash, and after the crash, because I would expect that many large-scale institutional investors cannot digest a daily drawdown of I don't know, 30-something%. So you can differentiate here in case there needs to be some differentiation between before the crash and after the crash. Maybe, Matthias, would you like to get started?
Yes, there's so many questions in one, but let's address it. So certainly true that over the last 12 to 18 months, we did see a significant increase in the next phase of true institutional adoption, right? And we saw that. Maybe I can highlight a little bit what were the drivers, and then what we've seen empirically happen also with our clients and how the client base has evolved at Sygnum, but also beyond. So we've seen from the last hype cycle, right? What it's all about trust, and at some point the bubble, I'm referring to the ICO bubble, popped. It was a bit detached from reality in some sense, and the infrastructure was not there, regulatory clarity was not there. A lot has happened since then. So there's more regulatory clarity has been established in key financial hubs. Switzerland is one, Singapore another, but also the US actually, particularly last year, a lot of progress has been made. That together with a lot of infrastructure that has been built, which allowed it for the first time for institutional investors to actually even consider allocating serious funds into the space, was not really there 4 years ago. Now it is. Again, we are just one example, but there's others that have worked relentlessly in making sure that even a large asset manager, a large family office, a multi-family office, basically allocators that manage third-party money, get us through their investment committee because we tick the boxes in terms of certifications, regulatory clarity, counterparty risks, capital adequacy, all these topics, reporting, the tax treatment, so that before it was simply not possible. So that combined with also regulatory clampdowns on maybe actors that have not really followed the rules so much has also led to money flows that have earlier maybe been with other unregulated players. The very daring early institutional investors in the space have also been flowing more towards regulated players because of fear of potentially being others, some players being shut down. So in summary, I think that combined with the environment that we're in, the macro environment, COVID, just making people realize it matters where you are here and now. And the digitization is not just on PowerPoint slide, it's really happening. And it probably makes sense to challenge the status quo every now and then a little bit and decide faster than before. I think a lot of decisiveness combined with the environment and the infrastructures there has led to really significant inflows, be it from family offices, be it from large asset managers, be it even from corporates that have started to use Bitcoin as a source of treasury. I can tell you that we even have now a regulated bank or banks that have allocated part of their balance sheet into treasury via our platform, which is something which is was impossible a year ago even. So that's just covering the first part of your question, but I don't want to speak too long. Maybe Maximilian, you want to add, and then we can go to the next.
Yes, but I can first of all, thanks for this. I can completely agree on this, and that's exactly what I saw from the institutional side. Maybe I can also make a brief dive into this history where I was first in touch with institutional investors in cryptocurrencies. Afterwards, I jumped to the recent topics. It was in 2017 for a securitization transaction where it was about repackaging a portfolio of crypto assets. And at this time, it was really like the regulatory environment did not know at all how to deal with the crypto assets. And afterwards, we had the question, we could pledge the crypto assets. And they were like, okay, we were discussing, well, but according to which law? The crypto assets are, first of all, on a distributed ledger. So what is the country of jurisdiction which you are pledging? There is not the right jurisdiction how to pledge it. And what was exactly missing there was, firstly, how do you bring the money into the crypto assets? What is the regulated entity here? And secondly, you want to pledge it. Well, why do you want to pledge it? Because you cannot store it in a regulated environment. And Matthias, as you said it exactly, that was also in Switzerland, where there was also quite good custodians, which were the leaders in crypto custody there. We had some discussions with them, but at the end it was again, why can't you bring the institutional money easily there in? Reason is because nobody's familiar how to handle it, nobody's familiar how to bring the cash on chain, and nobody's familiar how to store the crypto assets. And as the regulatory environment wasn't ever evolving, that was also definitely the case for our bank to say that's exactly the place to be. There we have the needs, and there we have to fulfill the needs. And Philip, to your question, well, are the institutional investors interested rather in Bitcoin, rather than Ether? I would even unfortunately, go a step back and say some institutional investors are thinking about this, but the institutional investors which we're in touch with in Germany, you mostly see that they are interested in crypto or not at all about the special cryptocurrencies. And then they're like, what do they want? They want a regulated way to bring the money into the cryptocurrencies. And Matthias, as you said, that they want to have a storing facility which has which fulfills adequate needs of the institutional investors. And there it's a German KWG regulated bank, which is a fully licensed crypto custodian. That's the right thing for the institutional investors, and I would definitely be happy to be at the point, Philip, as you said it, to come to the institutional investors and to think about which are the right cryptocurrencies for your case. But unfortunately, we are like, how Do you want to get access, or do you want to get access to the cryptocurrencies? Do you know how you can get access there? Do you know where you have the regulated players here in Germany to get access to the cryptocurrencies? And as you said at the banks, yes, we're here in an environment where we have not so many banks. At the first point, you can see, well, that's a great environment because you're the first. That's one way how you can see it, but you can also see it like you want to build a new infrastructure. And when you build a new infrastructure, no matter where you are in finance, it's all about regulation and harmonization so that everybody is speaking in the same standards and you have an interrelated network, because it's just like it does not make fun if you have a closed environment where you can trade tokenized securities. You want to have this environment which you have at the Clearstream on the new technologies, tradable 24/7, then it makes fun.
Okay, excellent. So, I do understand you coming from your perspective. You're sitting at your workplace and you're getting inbound mails from interested investors and so on. But I'm trying to if possible, like keep the overview of what's happening in general, coming from the universities. And to be honest, I'm not that positive, right? I'm positive when we talk about crypto assets, but in case we're talking about tokenization, especially from a German perspective, I'm not very positive, right? Because, look at the numbers. There is Bitcoin, and then there is Ethereum, and then there are a couple of other tokens. And these crypto assets are developing very positively and dynamically if you are now ignoring the last couple of days. But from a long-term trend, right, it's all intact and it all develops very nicely. So there is crypto, and there is custody of crypto, right? And the crypto stuff is basically apparently growing year by year. And, looking back by 2-3 years, including myself holding presentations about how blockchain might transfer the digital asset space and so on, I also said that security tokens are the next super hype out there. And what happened? Nothing. And therefore, the next is the digital euro. I love this topic, but it's apparently very difficult to really get things on the street. And this is, in my mind, driven by regulatory hurdles which are out there. And therefore, I think crypto is fascinating because the Bitcoin is simply there. It's the same Bitcoin in any country. You can transfer it from one country to another country without special securities laws and so on. And therefore, at this point of time, my opinion is crypto is developing very dynamically, but everything else is also developing, yes, but at a much lower speed. Yeah. And talking about tokenization, I would love to hear, Matthias, what you are saying, especially coming from an institutional adoption perspective. In Germany, it's now possible to tokenize debt, but it's not possible to tokenize equity. We now have inflation coming, and therefore, to be honest, how can you really offer people debt tokenization when there is inflation coming? That's for me, this is some kind of misfit. If I believe in inflation, then I would love to have equity tokens out there, which are by law not possible in Germany. So I feel a misfit here, and therefore I feel now reminded back by minus 2-3 years. Now the next wave is coming. Everybody now demands information on NFTs, but as soon as they have understood NFTs, suddenly they don't have budget because they now feel that it's too complicated, regulatory concerns are too high, and so on. And what remains then, once again, crypto and potentially decentralized finance, right? Please tell me what's your opinion about the statement. Am I too negative by trying to differentiate between digital assets tokenization on the one hand side and crypto assets on the other hand side? What's your opinion?
No, I'm 100% aligned. I mean, I couldn't agree more. And look, I even, if I reflect on how we categorize at Sygnum the different stages and the revenue potentials, we have a core, emerging, and future-proof bucket. A core is everything related to crypto, what I've said: custody, brokerage, asset management, lending. This is where we're growing. And there's immediate revenue potential and activation. tokenization is in the emerging revenue bucket, right? It's because it's probably one cycle behind crypto. If we are talking let's call it a 2 to 4 year cycle, which just kind of repeats itself. And for us, we believe that tokenization is just one cycle behind. I can say today we are holding, a 9-digit AUM in tokenized assets with us. So it's not like nothing. And it's growing. We have people want it. There is demand, but it's still kind of finalizing the infrastructure and building the market, educating a lot. Obviously, I'm taking the vantage point of Switzerland, where I can say, from a legal and regulatory standpoint, that's not our limiting factor. It's more, cross-border. It's just the entire value chain, the advisors to issuers, etc. Right? M&A boutiques, etc. That still have to get used to what this is and help to amplify and create adoption. But it's certainly not the legal framework that holds it back. In Germany, yes, I agree, that's clearly what it is. And I also can fully relate to this being a bit frustrating at times. Even I'm frustrated as a Swiss looking at Germany when I see how it goes. It goes too slow. And then there's this that future-proof, future-ready portfolio, which you may be surprised I would even put DeFi and NFT into it. Now looking from a more institutional lens, right? I personally believe the killer application will be the right mix of CeFi, DeFi in the right interface, right? Making sure that there's certain stamps of approval when it comes to smart contract security, the on and offboarding with regards to KYC, certain compliance rules also being implemented in a more decentralized infrastructure. And we are working on this, but this is for us kind of future revenue potential. And for the same applies to NFT. I do not personally believe that in a regulated space, real big institutional players allocating significant funds into unaudited, oftentimes decentralized smart contracts, right? Because again, there's third-party money involved. But it doesn't mean that it's not a great innovation, and it will. I'm also a full believer that it will significantly change how we interact with financial products. But I think it's a bit like it just needs another cycle, right, to get it right. Also looking from the regulators again, I find it interesting that you see that a long time the regulators didn't do much at all. Then they created regulatory clarity, started cooperating internationally, and then they started to clamp down, right? So it started with individual projects in the US. Oh, you didn't have a prospectus, but you should have, without going into specific cases. Then derivative exchanges, the BitMEXs, etc. of the core were being targeted. Now, spot exchanges, Binance even now being on the radar. In Switzerland, we've also had one or two situations, again, not naming any. And now a next phase, once it grows beyond 100 billion, for example, locked in DeFi pools, I think this will be the next sector where they will start, learning and looking into it. And then over the next 2 years, we'll also see that. So it's a normal evolution. So overall, I think the mega trend is very much intact. I believe also tokenization will lead to a significant revamp of how financial market infrastructure is set up. But it's a 10-year process. It's not it's not happening tomorrow. Yeah.
I perfectly agree. Max, what would you like to add here?
Yeah, definitely. So I also perfectly agree on the one hand is cryptocurrencies, the investment in cryptocurrencies and the development of cryptocurrencies. And this one is separated from the tokenization. But I think we should also split in tokenization. The tokenization, and in my point of view, there are two things in tokenization. And I think the one hand is the financial structuring. That's also the area where I'm originally coming from. If you want to have a tokenized asset, you cannot just look at the asset and then it's tokenized. You need to think about the legal framework, how you want to tokenize it, which claims you want to tokenize. Do you want to tokenize equity? Do you want to tokenize debt-linked claims? Do you want to tokenize profit participation rights? What do you want to tokenize? And then the other thing is the tokenization itself, the representation. When I think, for example, on a Luxembourg securitization transaction, you can either issue the Luxembourg note according to the 2004 law on securitization, and then you have a securitized note and bring it into the clearing system. Or you can tokenize the note, and then you have a tokenized note. but it's a security. It's not just a security token, it's a real security. And I think that's one of the big cases which needs to involve in all tokenized assets, especially here in Germany, that you have a regulation and especially a harmonization amongst other countries and amongst the market players, which really give you the benefit of tokenizing the assets. And I think that's exactly the case why the tokenization requires to scale up. If you have if you only have closed environments and you tokenize something, and then you tell them now it's tokenized, you can trade it in a closed environment, and they're like, okay, good, but why should I only limit me to the tokenized environment? Yes, because you have different technical standards. Okay, and how do I bring the money there? How can I settle there? Oh, you can only settle on this protocol. Okay, so the protocols do not match. How can we make it? And there's always this need for harmonization, as we've seen it, and that's exactly what we're working on in the securitization industry, in the LUX CMA. We want to push the securitization market, and that's why all relevant players in the securitization industry, amongst the auditors, amongst the legals, everybody has sat together and is setting standards there. And here in Germany, the first groups, especially the ITSA, is involving, and I think that's exactly the right way. But this is the way we have to go. We have to set the standards, and only after the standards are set, then you can talk about how can we make the tokenization now the real use case with the great benefits. There's one case where I see the benefit in the current regulation already. When I think of, for example, America compared to Germany, that were the discussions we had quite frequently in the recent years in the securitization industry. There is a much stronger capital financing in America than in Germany. The reason is because the players in America transfer investors want to invest money, and they transfer the money to those who have need for capital. Here in Germany, especially in the some years ago, it was only that investors transferred the money to the bank and the bank transferred the money to the companies, but there was never a direct link. And the securitization transaction was evolving in the recent years. Standards were set, and companies now get used to refinance themselves by securitizing and receiving money from investors investing in a securitized bond. And I think there might be a potential when you have a company which has a financing need and you have really great standards of a tokenization transaction. And this company can now come to the capital markets and say, there is a standardized way for crowdfunding. I will bring in my business plan. There is an entity which checks the business plan, for example, an auditor or something like this. You do not invest in just any tokens where you don't have a valuation of the underlying asset. And then there is an easy way to issue the token which are required for the refinancing of the company, and the crowd can invest into those tokens. Why is it easy? Because it's standardized, it's quick time to market, and you have few intermediaries. There is one special use case which I see there, because if you would like to make this by a securitization transaction, then you would have way more intermediaries, and I guess you would have higher costs there. But that's just one classical use case which I see, and definitely the tokenization of equity. First, is not only missing, but secondly, if you want to tokenize equity, it's also not just taking the equity and tokenizing it, it's also about valuing the equity and ensuring that the equity still exists, getting the financial statements, getting the proof of existence. If it's a physical asset, you need to ensure that the asset itself is insured against loss, against getting stolen, all of this. And I think those are the hurdles which you need to solve besides the pure legal hurdles.
Yeah, makes very much sense. I would perfectly agree. And from a German perspective, I would also agree. It takes a lot of resources to, tackling the topic of tokenization, and then you don't get what you want, right? That's different in Switzerland, definitely. Would be amazing to have an expert here from Denmark, how Denmark and the law over there is developing, say, with Sweden, Norway, and other countries. It's not clear how multiple countries are seeing this. So, but can we then summarize at this point of time? There is crypto. This is priority number one, also for smaller banks to earn money and to increase the valuation, right? And then you have the future buckets with all kinds of things, NFT and this and that and tokenization and so on. And priorities will shift from year to year. For example, we might end up in another crypto winter. Then you look into the future bucket and say, okay, now let's try out other things because crypto is drying up a little bit, right? Is this the way you are basically thinking of the future in terms of multiple blockchain-based products to be offered? But once again, now focusing on crypto as a summary?
I mean, I would want to differentiate between where we are in the cycle and across the different applications of blockchain. And there, yes, fully agree. Crypto is here now. It's in a significant growth phase. Next level of adoption has happened. We've discussed it. Even we can also go and discuss. We can maybe spend some time later on what happened yesterday and what it means. I would be happy to comment. But leaving that aside, and then there's emerging tokenization and the frontier innovations around DeFi, NFT, etc. From that, yes. But from terms of what it means for us, I said before, I believe you cannot be successful in tokenization if you don't understand crypto. And I said that because a lot of the infrastructure is actually very similar, if not the same. And there's a lot of symbiosis and synergies that can be created from an infrastructure, from an architecture, and also from a just company culture and mindset perspective to be successful across the three buckets, right? And so I don't see it as in we are shifting depending on where the cycle are. Of course, focus and priorities are always adjusted to also externalities, but it's more, in our case, it's a full focus on being a digital asset technology group with a banking license, another bank with an IT department, which is building the infrastructure for the future around digital assets. Okay. And that encompasses all three. So this all-in-one account approach, but across the cycles, right?
You know, I'm asking also from another perspective. Imagine now you have a large bank which is not yet in digital assets and tokenization and crypto, right? Say Deutsche Bank, for example, right? You don't find much PR studies there. You find a couple of analysts' PDFs, but not even a prototype, right? You don't find much, full stop. And what happens there? You know, time is progressing, crypto is growing, the custody is getting more professional, custody companies are getting acquired, and so on and so forth. What happens to such companies in case they are not touching digital assets, and now even more so, following your logic, they are not even touching crypto somehow? What happens to them in plus 2 years? I know
really see something there.
And maybe you don't want to comment on this, but that's something what I'm questioning myself is what happens to large-scale banks which are also systematically relevant to the system, whatever, in case they are not touching digital assets and not touching crypto for 2, 3, 4 years. Because in my mind, I'm very convinced that there is no financial market of the future without blockchain. And therefore, I would also agree there is no financial market without custody. And custody is best experienced and prototype with Bitcoin and Co, because that's the only assets to tokenize and to custody. To custody at this point of time. Would you like to comment on this question, or is this a little bit too putting you on shaky ground?
Well, me definitely, but Matthias also, if you want.
Of course, I could come. I mean, do you want to go, or I'm happy to?
Yeah, sure. Let me throw in some first thoughts on this, because we've also thought about this quite a lot, and that's also the reason why we as Vonderheit have decided to make the whole adaptation of the blockchain technology an integral plan of part of our business plan, if not the heart of our business plan, and especially about the bigger banks when they are not dealing with those technologies at all. Well, I would even go, what happens if they go on the digital, on the application of the blockchain technology, but everything into segregated departments, and the one department makes about thinks about crypto trading, the other one about tokenization, the other one about custody. I think that's so difficult for the bigger players in the market to have a harmonized approach, to have a harmonized goal within the company, and have a common understanding amongst all employees. And that's what we are doing since several years. We get all employees on a base level of understanding so that they know what's going on there, because you cannot tokenize without custody, as you said it, yes. And if those are just acquired companies, if you just acquire a crypto broker and a crypto custodian, then you do not know anything about the processes behind them. Then you do not know what's happening in the deep technology. And Matthias, as you also say it all the time, it's like when you do not understand what the technology means, then you cannot be successful in this part. It's like you cannot build a car if you do not understand how the engine works. And that's my opinion on this. And then what will happen with those banks? I think as long as those standards do not yet exist, and as long as the players in the market do not yet say, well, I've now also understood the advantages of the blockchain technology. I see how I can gain from this technology, and I see that standards are evolving, and I want to be part of the network where the standards exist. Then nothing happens. But as soon as this exists, I would answer the question like, what will happen with a bank who said, well, I think like this, which I've hanging here somehow behind, there's a picture, I think it's here, of a materialized security. Here it is. And when you say as a bank, I do not believe in Clearstream, I do not believe in the clearing system, I believe that securities have to be on paper and investors deal the securities only with a bank, but not on a clearing system basis. Well, you don't see, or you see quite few of these banks who have this point of view. And I could imagine this was a recent development which was quite significant within the last 100 years. And the application of the blockchain technology is a similar development which could have a similar output.
I can maybe add, try to be short. First, the pain, why have many have not done much? I mean, the pain points were not big enough. It's just been, kind of, it sort of worked, worked, and the custody fees came in, the mortgages business sort of worked, and yeah, the pain points, the pressure was not there. In the last, again, 12 to 18 months, when you zoom in on crypto, the pressure has been significantly increased. From the client side, but also from US banks in particular, because the big boys are now moving. And I know that in Switzerland, because I'm close to the market, there's not many banks, if at all, that are now not seriously thinking at least about what they should do about it, right? Some have already launched projects, some are in the innovation project. We have several banks already leveraging our platform. And what I found interesting is, one is public, Bourdieu, for example. They have acted fast. They're 178 years old bank, and they're owner controlled. And it's the same topic as what you guys have both started with, right? Small, structured, fast decision making, have survived for much longer than many other banks. They kind of get it and do it fast. So isn't it funny that actually the oldest banks are the first ones working with new players who open up technology and open it up as a result also to their clients? So that also shows that small structures will be faster here as well. Secondly, yes, there will be different speeds with which banks are approaching this, but the whole notion around blockchain is interesting, but Bitcoin is just for illegal activities. Kind of that response in the CEO letter to the world is just not enough anymore, because it needs to be more reflected and there needs to be strategic thinking in it. And I feel banks are now doing this, right? And the pressure is up, and if people don't believe that statement, or even CEOs and group executive boards of big banks, they should just look at the price chart, at the share price development of their own companies over the last 10 years.
And compare it to Coinbase, right? Coinbase has the double or the triple valuation than Deutsche Börse. This is something where I think, why is this not recognized? With the Coinbase is a company coming out of nowhere, suddenly has the double and the triple valuation than Deutsche Börse, and I don't know the market cap of SIX in Switzerland, but it's probably similar. But SIX is quite active, right? That's okay. Follow-up question, because as far as I know, large banks, the problem is, even if in case you would like to change something, then the product IT release cycles, they are not like 2 weeks like in an e-commerce startup, right? But they are 2 years. So in case they would like to change something, then it by definition takes them plus 1 year, plus 2 years, right? And that's what I think sometimes that's exactly the time which 1 year, 2 years, it sounds kind of short, but in the crypto dynamic, you know it better than me, 1 or 2 years, your valuation might have developed times 10 in 2 years. Who knows, right? And then I think that these industry dynamics are partly neglected by large scale players. The same, by the way, with large scale countries, and because they simply cannot move so quickly. Okay, one of the last questions I would like to take. What's your opinion about decentralized finance? Because on the one hand side, Matthias, you said that it would be interesting to somehow combine decentralized finance and centralized finance, and I basically agree. But on the other hand side, you see that regulated companies have so much difficulties adopting custody, Bitcoin, crypto assets, so it must be even more complex to adopt DeFi, I could assume. And therefore, an alternative thinking could be that DeFi is growing even more in the peer-to-peer area, where you do not need to have regulated entities, right? So, what's your expectation of the future? Is DeFi growing into the area of centralized finance businesses, like regulated businesses and so on, or is DeFi growing into the area of peer-to-peer finance because it can grow there with less restrictions, so to say, right? It's a difficult question, I would presume, but what's your opinion here? Maybe Matthias, would you like to go first?
Yes. Yeah, so there's no question that the opportunities are endless with the technology that it brings, and it has been proven. It's not just the vision, or it's just you can look at it. I mean, I've played around with pretty much all of the liquidity pools out there and what you can do, and it's just mind blowing, right? Basically, finance redefined completely. Do I, as a result, believe that basically all of traditional finance, where still 99% of the money flows and the capital will flow into this, and we'll become a peer-to-peer enabled global society? No, I don't think so, for the following reasons. Number one, opaqueness, a lot of capital being managed for third parties, for other people, as a result of which a certain not having a counterparty kind of is not an option, sort of, for big chunks of capital, and thirdly, because of the just that it's an evolution of innovation evolution, where right now we have seen explosive growth. I personally expect, which is a personal view, that maybe 70% or so of the players out there in the DeFi space will run into trouble some down the line. Some will fade away, and then the top 20-30% will really scale. And therefore that I have empirical evidence. The founding teams and the guys really running it at the core, they're already now thinking about how can they make sure that they're not running into trouble with, once they're becoming too big with the regulators, because they're known. These are people can be called, and they know that just the free flowing of money of billions of dollars without any checks and balances where the money comes from and goes is probably not a vision for the world that will be accepted by the majority. And hence I personally believe, and we follow that principle, future has heritage, right? What we are discussing is the future, but there's also a heritage, and the heritage means accepting that there's regulatory frameworks. There is an anti-money laundering concept which sort of makes sense. It feels right. The sunshine test works, and bringing that together will be best. So you see it when you look at Signum's mission or mission, and you may say it's a contradiction. Our mission is to empower everyone with more direct access to ownership and value. And your peer-to-peer vision is exactly that. But we believe the path towards this is a long one and needs to be balanced by accepting that future has heritage, right, and combining the two. So that's my personal view.
nice closing word from you. Now, Max, your closing.
Definitely. Quite a nice word, and the opinion I also can add is just I'm aware of the advantages of DeFi, but what I cannot estimate is exactly also those points which you mentioned. I cannot estimate how the regulatory environment will evolve, and how the regulatory environmental development can maybe also be harmful for DeFi. That's the one thing. And what I also cannot estimate is just which pitfalls we have, and which critical which critical events could be there on the DeFi environment, which could make people fearful in DeFi, because we can definitely say we've seen a cycle where DeFi has shown all the advantages, but I'm not aware of all the disadvantages. So that's why I cannot give the final estimation, and we will also have to balance them. And then I'm quite sure, definitely, that the DeFi is the development of the capital market financing, as we added from what I just discussed, from the pure banking financing to the capital markets financing to the DeFi financing, would definitely be a desirable development.
Perfect. This was also a very nice closing word. So I will also try a nice closing word. Thanks very much. Actually, I really liked this discussion. I hope it became clear where also the differences were between two very agile smaller banks from Switzerland and Germany. Very nice meeting you. Very nice discussion. I also learned a lot. And therefore, I think it's pretty clear, the biggest risk of blockchain is to not deal with it and to somehow ignore it, right? That's the biggest risk. That's larger risk than energy consumption and all this other stuff. The biggest risk for banks are to not deal with it. That's my personal opinion. But I told this to Paul Achleitner from the Deutsche Bank. He just smiled somehow, and therefore I really have the feeling that it needs smaller challenger banks, so to say, who have the potential to grow, because most probably the large-scale banks, they might not be able to digitally transform. With this, I think we had a very, very nice conference today. A very nice. Thanks for organizing it, Klaus, and also Mette. Therefore, have a nice evening. And if you're doing this once again, then please let us all know.
Thank you.
Perfect. Thank you for the great discussion.
Thank you, everybody, for joining. This was really interesting. And I just want to thank our sponsors, TechFund and ADDX and Crypto Valley Swiss. And of course, all of our media partners, event partners who helped push this event and make it great. And thank you to all of our speakers and our attendees. So hope to see you all next year.
Thanks.
Yes?
Thanks.
Yeah.
Thank you.
Bye-bye.
The social lounge is open. What? Sorry?
Hope so too.
Yes, the social lounge is open. So if you want to continue talking, everybody can go there. And the speed dating app is also open for a few days. So feel free to come back and build your network. So thank you, everybody, for participating. And videos will be out within a week. Yep.
Thanks.
Bye-bye.
Bye-bye.
Have a great evening. Bye.
The real estate industry is plagued with paper-based, time-consuming, antiquated processes. Only 7% of global real estate is available to investors, whereas 80% want to invest. Real estate is extremely illiquid, and investors are usually stuck with their investments for many years. DigiShares solves these problems with our blockchain-based tokenization platform. We help real estate developers and asset managers digitize and automate their processes. They can reach new types of investors and allow their investors to trade. Our platform gives any asset manager or real estate developer full control over financing and management, both for asset sales and new development projects. Real estate-backed tokens can be issued, sold to investors, or traded on the platform. This extreme degree of automation provides high efficiency and low cost. DigiShares allows asset managers to fractionalize, giving smaller investors access to real estate. The result is democratization and equal opportunity access to wealth, both key visions behind blockchain technology. Tokens issued from the DigiShares platform are usable within the entire blockchain ecosystem. They can be traded on exchanges, stored safely with trusted custodians, or used as long-term collateral for DeFi lending. Best of all, DigiShares platform doesn't force real estate investors to use crypto to invest and trade. We provide on-ramp systems where investors can deposit and withdraw dollars and other currencies. While the platform uses blockchain to automate transactions, we don't impose it on our users. Contact DigiShares if you want to get full control, reduce administrative cost, and offer many new functions to your investors.